towards the next panel discussion, requesting our management team to kindly place all the seats. Well, next panel discussion is about CXO, and the topic is NBFCs to Fintech, a bridge to four. Now requesting everyone to put your hands together for the moderator, Dr. Kumaran Sampath, MD and CEO, AEGMA Capital. And meanwhile, requesting all our panelists to please join us on the stage. First, Mr. Ashok Mittal, MD and CEO, Prest Loans. Mr. Pankaj Gupta, CEO, Mufin Finance. Next, Mr. P.S. Huda, MD, Prayatna Microfinance. Next, Mr. C.A. Vijendra Singh Shekhawat, CEO and Director, Choice Finserv. Next, Ms. Anish Kila, Director, Perfect Finance. Next, Ms. Aditi Singh, Head Strategy, Satin Credit Care Network. And today we have discussion points on new and advanced technologies, building values through technology, enhancing transparency in the system, serving masses through technology. Requesting everyone to please put your hands together once again for CXO panel. Now over to Dr. Sampath.
We also have two more speakers. Yeah. Good afternoon, everyone. Somehow by design, all my panel discussion with B2B is in the last, or it's actually pre-lunch. So very uniquely, I don't know it's planned that way, or they've given me a task to make it more interesting. So I remember we had a wonderful panel discussion, which was the last session, and everybody said it was really wonderful. Yeah, I actually start with a small story. We also come from a old age kind of a journey in the NBFC sector. Started it in 1995, and thanks to the Fintech MD Ashutosh Jadhav, he was showing one particular screen. I really didn't understand what it was. Okay, so we have actually evolved. What do I say? It's a different world altogether. Today we are in a world, you have to hardly see any customers at all. You could still lend, you can underwrite, you can do various activities with one customer. And as the journey has progressed, so one interesting story which I want to share. So do you all remember, okay, how many cricketers here in the room? Anybody can lift your hands? Any cricketers? Okay, do you all recall when was the first time a batsman was given out, okay, using the DRS? Fast, running out of time. Okay, yeah, so this question has got a relevance to city which we are in today, Delhi. The first batsman who was given out on a DRS was Vijendra Shekhawat, and he comes from Delhi. Okay, why do this question relevant to the what a panel discussion we are doing today? I remember in 90s, okay, whenever Indian team plays, and if Satin is there, we are still safe. And if Satin gets out, thanks so much. So the match ends there, and we are all good to go. But there were many instances where Satin was given out, but there was technologically, there was no any option for us, but we always felt it was not out, particularly when India-Australia played any game. So the kind of immense pressure put on Satin was, whenever even he misses the ball, a huge appeal, he was given out. So this is the instance we have seen. So I will straight away relate that to the current times now. Just imagine what we are going through. We have an hotspot. Okay, we have a ultra edge technology to tell even the minute of minute a touch on the bat. Okay, the batsman gets out. Imagine what would have technology happened if we would have had technology way back earlier. So I think, so particularly me, personally, I'm happy enough to see this kind of journey going through, but we also have wonderful youngsters here who have a very different mind. And today we are talking about how an NBFC, which is an old school of thought, can also evolve with the fintech kind of model, unbelievable way of thinking the younger generation have put in. And this is going to evolve further. And if an NBFC and the fintech can collaborate better, there were times where each others were competing with each others. I think those days have gone. It is time to collaborate. If you're able to collaborate better, for example, you have so many IT company, technology companies. If you can pick and choose each of the models, I'm sure while going back, you could be a better company. Okay, so with that, so we are talking about an NBFC turning into a fintech and how the journey can evolve so that you are relevant in the market. So with that, I have wonderful speakers. I'm really lucky to have the most experienced people around here. And also thank the earlier panel. I think they gave a different perspective, all that German, Lyft and all that. In fact, I'm going to US maybe the next year. I will definitely try and use the Lyft and understand what the technology about Lyft is all about. So with that, I'll start with my good friend Ashok. Ashok has been a very seasoned name in the industry. And I'm also lucky to have you on the panel, Ashok. So Ashok, so what do I ask? Because you're expert in so many things, but I also picked and chose a very specific question to you. Fintech largely speaks about unsecured lending, so which is where they have actually shown their expertise. Can fintechs also focus on the secure lending going forward? And what are the current trends in the market? Over to you.
Thank you so much. Thank you so much. First of all, I think the subject itself is a debatable subject. Should be NBFC to fintech or fintech to NBFC? Because in last, let's say 3-4 years, we have seen a lot of fintechs who started their tech platforms. They ultimately end up getting a strategic tie-up, investment, or acquiring, or being a NBFC, right? Second development which has happened, I think, since 2017-18 is that technology has become more like a commodity. Every traditional NBFC has ultimately gone to that extent of changing their tech platforms and getting a lot of evolution and using maybe not really a complete tech platform from beginning, but they would have adopted things gradually. Let us say initially maybe KYC, then underwriting methods, then collection methods, and so on. I would like to highlight one specific point because there are a lot of experts from different areas. Many of them are senior to me. Is the potential for NBFC to become fintech, and especially on the secured loan space. If you really see the fintech space, that is like more crowded in personal loan space, which we feel is simpler version because the assessment or verifications are comparatively easier. It is little more difficult for, let's say, business loan or MSME loans where you need to assess the income. And we are a very small size NBFC company, so we represent the micro SME in terms of assessments. So we find that most of our customers do not have that ITR, GST, bank statement, etc. So we really need to assess their income. Now, to some extent, this also has been kind of, let's say, resolved by many NBFC companies by using technology. But one particular area where we see there is a scope, either maybe NBFC will make it by using technology by their experience, else maybe a fintech will do it and then NBFC will adopt it. That is how do you do assessment of properties or collaterals which you are going to finance. Now this entire area is currently not really that developed by tech platforms. Let us say when you do any kind of collateral based loans where you are using the property, in lot of states you are not able to get entire data online. So you need to get the valuation done, you need to get technical done. You need to get the search report of the properties. In lot of areas, you are not able to really identify the properties properly. So in fact, I have kind of interacted with some startups who say we are developing it, but I think this is a difficult area to really work upon. But this is huge in terms of size and opportunity, because you would have seen the trend. Gradually people are moving away, maybe slowly, slightly, and there have been concerns from Reserve Bank also that you should move, say, away from personal loans. So a lot of people are now focused on doing some kind of secured loans where you have security, especially the collateral. So assessment of security, their valuation, their technicals, the people who really do assessment, whether they are technology savvy, they can use that tech. Can you create some application where the person goes, visits the property? You can have all pictures, and maybe the valuation is not discretionary and more scientific in nature. So is whatever data is now, a lot of digitization is happening. We discussed that in last time also, that if the property papers are completely digital form and they can be available in all the states online, then this is I think this is a very big scope where larger NBFC or some good fintech can work upon, and this will provide the right path which you have mentioned, NBFC to fintech, in terms of collateral-based loans. So I feel that this is the area where we need to discuss, explore, and have huge amount of opportunity. Thank you.
Thank you. Thank you, Ashok. Very nice insight. Largely, if you look at, so why are we all here today, and what is the background bit, for the discussion what we are having today, is to service that one customer. So if our technology, if our process, if our rules of the game is to address that one customer, and if you're able to give the best-in-class service, I'm sure the product doesn't matter. You could do business in a long run. You could do business in a very profitable way. Technology is very important. At the same time, customer centricity is a very, very important subject. Everybody should carry that, because with customer service and with customer-centric approach, the organization becomes much stronger. So with that, I have a good friend who comes from the city of love, Jaipur, Vijendra Singh. So we were debating what is the subject we need to debate, or a question to put forward to you. So he said NBFCs largely work on the physical model. So most of the things we do physically. But when it comes to the fintechs, they work very differently. They don't believe in working physically. Everything works on system. So your question, Vijendra, is how do you look at the physical approach to the fintech approach in the current new age?
Yeah, thanks, sir, and thanks B2B for calling me here. Just extending what Ashokji has already mentioned, the fintech, technology, digital, physical, all these depends on the product and the customer whom you wanted to serve, right? So as Ashokji already mentioned, if you wanted to do personal loan or unsecured kind of a loan, the digital model is very much good today. But the NBFCs like us, who are serving to purely rural kind of a customer, rural kind of a properties, right? Where the digitalization and technology use is, yes, that's there, but ultimately we need to assess the customer who don't have any kind of information publicly available, right? And the property, which also is very different from the urban and urban poor, because see, one is that we need to check the ownership of the property, that who is the owner of that property. But this most important thing is that how that property is built up, how we need to calculate the value of the property, right? And then also see the customer profile. So at that segment, my view was that if you are catering to that kind of a segment, 100% through technology is not possible. We always have to be on the hybrid model, right? So I'm saying from the underwriting of property and checking the customer at the ground level, you always need to have some people who will go and check all these things. From the process perspective, you know. So when we discuss on the technology, the onboarding of the customer, right, signing of the documents, the loan agreement, e-nets, p-nets, all can be digitalized, right? So that's why we are saying the NBFCs like us, the technology is enabler to reduce the operational cost. But 100% underwriting by the technology is very difficult for us, because ultimately what we think, right, it might be a traditional mindset. Some people say that when I go to a fintech, you know, sessions, where always the fight is between these. What we understand is that NBFC and lending business is not a business of giving the loan. It's a business of collecting the loans, right? The collection, the lending ends with the collection, correct? So that's the reason we always say, yes, the scope is always there, right? Because there are different kind of a customer segments available, right? And the ultimate digitalization obviously help us being a traditional NBFC also, and it will help us to fintech companies also, right? So my thought is that we should always be on the phygital model, right? When you cater to these kind of a customer, that's my view on that.
Wow. Thanks, Vijendra. With that, I just recall one incident. See, most of the time, during our times, when you meet a client, you understand his business as well as his journey, okay, what it really took him to this level. But today, we have most of our customers, though those customers have actually become our good friends. So we have seen their journey with us through our journey. So one should not forget that what a touch and feel model will still remain. Okay, though we use the technology to do our underwriting, to do our collections. But the simple rules of the game is always create an opportunity to touch and feel the customer in the era of fintechs. So with that, so why I choose the woman, only one speaker here. She comes at number 3. So number 3 is also my lucky number. So here we have Aditi, who's got a very great insight on the new words called AL and ML, whatnot. I think we are in a very different era altogether. Aditi, a very important question to you. How is AL and ML going to change the efficiency further and bring in accuracy in decision making in our business?
Thank you, Sampath, and glad to be here. You could have also said the best woman on the panel. I would have felt very, very, you know,
I'll do that next
flattered,
time.
But yeah. So yeah, coming to the topic, actually, when you say AI and ML and why are they required and what is the efficiency, I will say the efficiency is on account of the urgency. And why the urgency? So 70% of India lives in rural, in villages, and they contribute 47% to the GDP of India. You know what is the credit share? Any guesses? The country who contributes 47% to India's GDP, this segment, what is their share in the credit? 8%. It's not even 2 digits. Now that's where the urgency lies. Metropolitan, they have 62% to 67% of the overall credit that is lying in India. So that is where we have people who are contributing, who are economically active, but they have no access to finance. Now, who will do it? So I work with a microfinance company, and we have 32 lakh borrowers. We serve only women borrowers in microfinance across India in 1 lakh villages. Now, are we doing enough? Maybe no. Microfinance industry has 7 crore borrowers. But if you see, we can actually be threefold within no time. Now, it is like people who have generational wealth and who don't have it. So we have to skip that level. And to do that, we need AI and ML. Now, how to do it is the answer. So while we have branches, and I totally agree with my co-panelists, it has to have that human touch. But how to make it, I always say technology is an enabler. So through AI and ML, can we do the onboarding better? Can we do it faster? Can we do it more efficient? Now, my sector, for instance, we use a lot of data from the credit bureaus. Now, on the basis of credit bureaus, we make AI-based scorecards. We, in fact, try to predict the patterns. And I'll give you one example. If when we looked at our data and we were trying to see why is the portfolio PAR is increasing, what we found is the KYC is done in the evening post 6 p.m. They are contributing to more PAR. Now that is where technology helped us. And how? Because the boy has to call it a day. He has a target. So what we will do? He will just cut some corners and just, जैसे हम last day पढ़ाई करते थे ना, okay, I have done it all. And so now comes technology. Technology comes to completely eliminate the human bias, make the process very objective and fast. And that's where through machine learning, we give scorecards, we do the assessments, and we serve these people better. Now, as per the last CRISIL report, what it says is, we have, 5 lakh crore worth of housing demand coming to the secured asset classes. And we have 9 lakh crore of MSME demand in India. In India, majorly we have MSMEs and only 17% get access to credit. Now comes, like I belong to a state, Haryana, which has completely digitized land records. So we have seen this journey and we know how we can actually going forward. So Satin, my organization, we also have a book where we are doing secured MSME lending to the microfinance graduated clients. Now because of these, so what we have seen is, we have a branch model, we have a physical model, we meet our clients 2 times a month, but when we use these sophisticated tools, one, it is 100% cashless, we get a better ESG score for that. And then also it is, when you give a second loan, you don't have to do the entire process again. Now you go to rural India, so like in the earlier panel, people were talking about taking a photocopy of a KYC and a photocopy of the photocopy henceforth. And in the process, I will have Ashok ji's picture, his number and my name. And will the loan, and it will be a 0-hit customer, score will be -1, bank, give the loan. Now when we directly scan the KYC, we go to the UIDI portal, we check the history, then we look at credit bureaus, we do the bank account verification, we have eliminated many layers and made it more effective. Now comes when you scan the card or how do you use biometric. Then in rural India, the fingerprints, of course, will not be working. So we have switched to iris. Now that is most efficient. So these are some of the things I would say by which technology being an enabler makes us reach to these places and provide faster credit and more credit. That's it.
Wow. Anyway, I think I missed to say that I think you're an amazing speaker.
So I'm indeed the best woman on the panel.
So very happy to you on board. Anyways, it's very interesting to look at the journey. And one aspect which I feel in their journey of business is the social responsibility. So we should all keep one thing in mind is helping each other. So you're going to help your customers by giving funding. So remember this rules, NBFC, Fintech, it doesn't matter at all, but the rules of the game is you're going to help someone. So keep the social responsibility in mind, it largely helps. And that is where, yeah, so I've just missed another thing. Can you imagine the average ticket size with Fintech in the current era? The average ticket size of loans, which was dispersed, is 9,954, as specific as this. If we don't have Fintechs who can help us in making things faster, addressing the mass, okay, we cannot even imagine addressing. Okay, with that, I'm really lucky to have Mr. Hodaji, MD, Prayatna Finance, and a banker with almost close to 4 decades of experience, and heading this company, which is into microfinance. He's got a very different perspective because microfinance is furthermore what is a cut open into a very, very small ticket size kind of business. So how can a microfinance company integrate with the fintechs of the world and see how they can increase the business and take the business journey forward? Over to you, sir.
Thank you, Dr. Sampath. Yes, I'll be talking to you on the topic you gave to me. In the time of the COVID, when banks shrink their responsibility and lot of opportunities were available, how, as a microfinance, we try to catch up those things. Yes, my friend Ashok was telling right from the first time, NBFC and Fintech, which is going to which side? So same way, NBFC, we agree. And my another friend was talking about two things. We are doing, of course, sanctioning the loan. Sanctioning process is one. And selecting the client. This is another important thing. But we agree how much enabling environment can be created where we can cover both of these. Yeah, no doubt regarding sanctioning and everything. No doubt IT has done wonders and that has enabled us. Yeah, Anita was declaring it, she spoke 6, 7 times. IT is a really enabler. And that important thing, that character really can transform MFIs. And perhaps this is the IT only, where in microfinance and NBFC, we use manuals, everything manual, where proper use of IT, that can make us banks. So whenever their space is left by the banks, we can do that the same thing. As for bank concern, I'm the banker as well, ex-banker. I retired as a general manager from Oriental Bank. We created space. But on those spaces, NBFC and MFI came. Those MFI NBFCs, of course, not replacing the banks. That space was not with the banks. That space was with cooperatives. That space was the lowest mile where nobody was doing the business. But now, banking are going up and up. So space is increased. Can these NBFCs or MFIs, they are strong in dealing the clients, in selecting the clients. They are strong to devise the method, sociological and psychological method, peer pressure, meeting type, to take the loan back. While banks have a project financing approach, they are more technical in that. So converting NBFC MFI to banking structure or equivalent to the banking strategies can only be, of course, done by technologies, and which is the right platform here we can discuss. So proper use of IT certainly cut our costs. Problem is with NBFCs, lot of manual, lot of things, lot of cost of operation, while banks do not have those. So if we use that, certainly we will be able to lower our cost and can fill the gap which has been created by the banks. But COVID was one example. There are not many. Andhra crisis, talk about Assam crisis, and why not? You forgot about the Notebandi, which did everything. So do you believe COVID is the last? There can happen anything. And what to talk of so many things and bad things, even sometime whenever election comes, particularly state elections, we are afraid of. So we MFI people, we NBFC people, we have always to remain alert, to keep ourselves updated, and to change our strategies in the changed situation. Many a times, wherever people talk about, many a times they create havoc by doing small statement. In such a situation, like in COVID, I say, or like in other things, we devised different strategies. In case of COVID, mobility was restricted. What we could have done? Even it was risky to lend at that time. So we in Prayatna, as a microfinance, we did non-microfinance loans and really availed that space which was left by banks. How we could do? We hired some ex-banker and used the real technology, and that way we could create a portfolio which was not a microfinance one. And that mitigated our risks. So that is the thing. So my dear friends, get ready and should be always be ready, ever ready rather. Shocks will come, and let them come. We have to make ourselves competent enough whenever these shocks in any form, maybe COVID, maybe Notebandi, maybe any crisis, we can cope up, and that cope up key element that we will support us to cope up those things is technology. And that technology will empower us, really, the space being created by banks. Yeah, thank you, doctor.
Wow, sir, I think all this actually came out because of your deep insight about understanding the business. But one thing I would tell each one who are into lending activity, just go and listen to a customer who's a microfinance customer. He's got a different story to say. And his lives actually evolved with the most emotional stories because he is evolved with that particular microfinance companies for ages and years. Thank you so much for that insight, sir. Yeah. We have Pankaj, who's very fascinating. I just asked him, all well said, prepared. He said, everything is on the flow. So looking forward for a wonderful answering. And Pankaj, how do you see today, the moment we say fintech, we only want to talk about the top cities, and though I think the business is evolved in the tier 2 and tier 3, but largely if you look at any presentation of a sales guy, we'll always say the tier 2 and tier 3 are the most biggest opportunities and where you could get better rates. So your insights about fintech and the NBFC growth story in the tier 2 and tier 3 cities.
Thank you, first of all. I think the story is way different. And it is primarily when we try and match this, a journey from a NBFC to fintech. There are multiple things, and we need to understand the formations of it. So when we talk about today, the risk-taking capacity, the FI take very minimal risk. Moving on to bank, they have an opportunity to take a risk. Moving to NBFC, we take a better and higher risk. And fintech, they don't even think about risk. They don't even think about collecting money, correct? The level of compliance which a bank has to follow, an NBFC has to follow, are very high. And that is the key differentiator why these paths they stand away. Because we look at, we have to maintain our credit rating. The collection has to be perfect. We think about process and procedure first before thinking about lending the money. And that is the differentiator which I see between NBFC and the fintechs. Be it compliance, be it collection, be it everything. But today when I talk about, I feel there is a scope of not fintech, but phygital tech, where, a combination of both can exist or coexist, where technology is being used to capture more and more customer base, number one, where technology can be used to probably smoothline the entire process, structure them well, and probably help in collection in a much faster and an effective manner, putting up reminders, putting up annoying calls to customers again and again, whatever. So my point is that using technology for doing and enabling the process and making it more structured, where and forming something like phygital approach is something which can be done. And I think so a lot of people in NBFC, to keep up with the pace of fintechs, are looking at doing that. And I think so that's the first crux which I wanted to talk about. The second point which you said that yes, tier 2 and tier 3 cities, yes, rubber meet the roads there itself, because the access to credit in the metros is much higher. But when we talk about access to credit in tier 2, B and C, it is very minimal and it's in single digit. The issue there is that, coming from an NBFC mindset, when we open a location, if it is a tier 2 and tier 3 city, the first thing that we think, can we collect money here? And if we can collect money here, we open those locations. And typically, people sitting from NBFC out here, they will all agree to that. If we are able to collect money back and maintain our NP level as per the RBI guidelines, is an area that we would be really happy to look at, correct? But, with the higher cost of capital, we don't get the cream customers. With higher cost of borrowing, we probably cannot lend at low pricing. For higher operational cost than banks and others, we probably cannot have a work on smaller NIMs. So those combinations are the key points which need to be taken care and thought through before bridging these gaps. And that's the problem statement in tier 2 and tier 3 cities, that people would be happy to reach out. Today, we operate in an e-rickshaw space, place called as Motihari in Bihar. Probably, if a digital loans are available, people are ready to take it right away, whether they have money or not. Dealers are filling file with overpricing and doing everything to make it happen. No issues. The customer has to pay. But who would reach out to that customer to collect that money? The fintechs are not thinking about it. And that's the reason where I see there is an opportunity also, and there is a high risk also. And the risk is bigger than the opportunity for entering fintechs in tier 2 and tier 3. That's what I feel. I don't know. And it also depends on capacity of fintechs to probably take risk or put the NPA numbers together. So I think so. That is to be the precise reason.
Okay.
I see that as opportunity and risk too. Thank you.
Just give me 1 minute just to add on Pankaj. सर ऐसा नहीं है कि हम फिनटेक नहीं है, इवन हम लोग फिजिकल पे हैं, फिजिकल पे हैं. बिलीव मी सर, इवन इन आवर केस एंड पंकज आई नो एवरीवन, हम भी कस्टमर को 2 मिनट में डिसीजन देते हैं सर. ओनली डिफरेंस इज ऑन द डिसबर्समेंट, राइट? फिनटेक भी वही 2 मिनट में डिसीजन देते हैं, हम भी 2 मिनट में डिसीजन देते हैं. द ओनली थिंग इज हम डिसबर्समेंट कस्टमर को फिजिकली मिलने के बाद करते हैं, उसमें हो सकता है 24 घंटे का टाइम लग जाए. फिनटेक में इतना सा है कि 2 मिनट के डिसीजन के बाद में 1 मिनट बाद में पैसा खाते में चला जाता है. दिस इज ओनली द डिफरेंस. बट बाय द प्रोसेसिंग टेक्नोलॉजी वी आर नॉट इवन 0% लेस देन द फिनटेक.
I would like to add here, because when we disburse money, we disburse it to collect it back. And fintechs disburse money to disburse the numbers. Correct? So that is a one big difference I firmly believe in.
Yeah, I think with that, I just got a mind recall. I still remember I come from a city, Bangalore. Bangalore was seen as a tier 2 city. Forget about the business. Okay, so Mumbai and Delhi was always seen as a tier 1 city. And Bangalore was seen as a tier 2 city. And the Hublis of the world or Mysore was seen as a tier 3 city. Now what happens here is, the tier 2 city gets a different rate. The tier 1 city, one gets a different rate. Now forget about where is the customer here? Okay, so with that, just see how the world has evolved, and today, when you say fintech and business, everything is on one platform. Everybody gets a similar rate depending on his credit score, depending on his CIBIL score. So the rating system is taken over the cities and opportunity. But however, we still will see very, very large scope of business coming in from tier 2 and tier 3 and even 4 and 5 as well. So while I was just trying to observe, Delhi automatically, slowly, it's moving towards EV headquarters for the country. So I could see many entrepreneurs coming forward and getting into business. You can say, just go back 3 years back, EV, अरे यार छोड़ना, battery है, क्यों fund करना है, गाड़ी नहीं है, कुछ नहीं है, battery is there, it's gone. But today I'm seeing a complete shift in terms of the business model is concerned. And we have an expert here, Anish, who comes from Perfect Group, who largely focuses on the EV and EV vehicles. Anish, your perspective about the current challenges and how can fintechs and your business model work together?
First of all, thank you B2B for having such an experienced panel here. And thank you, Dr. Kumaran. I am more used to extempores here, so you were kind enough to send us the questions beforehand, so we're more prepared. But honestly, like our panel, I think my turn has come in last, so my job to make this discussion lively enough. So I think in summary of what we've heard from everybody here, we're basically trying to compare two models of financing here. One is a fintech model wherein we're saying there is no physical interaction, and you're saying that the entire lending happens on a digital platform. Whereas there's all of us or the old school NBFCs have evolved from a completely physical model of lending. The way I see the future going is all the tech partners that are available here are the ones who are trying to help us become a phygital model, which is what everybody agrees is the way forward for the old school finance companies. But similarly, you will realize that the moment the fintech companies move towards products other than personal finance, they will also need on-ground presence. And that is where they also become phygital. They will also have to use agencies for collections. They will also have to use agencies for FI repetition. and confirming what data has been done. Now, even when it comes to technology adoption, I think what technology brings to the table is speed, transparency, and accuracy. And who wouldn't want that? So there is no debate about any NBFC wanting to adopt technology. It is also about in what manner, and like we've discussed, what kind of products are we looking into? What is our mindset when we are trying to be a customer-centric NBFC? What are we trying to bring to the table that is differentiated? Because why else would the customer come to you? We've been doing vehicle finance for the last 36 years. And we understand that when the product matures and when the bigger players, the banks come in, they also start squeezing out the smaller players because they are bringing a lot more to the table. That differentiated product is what technology helps you gain as an advantage. Like now for the EV space, right now it's an abnormal growth market because it is us, the NBFCs, who are now trying to analyze the risk. It is when our books get refinanced, that is when the bigger players will understand whether it is a market worth entering or not. So similarly, it's for the tech players. They are the risk takers for that market. They are analyzing the risk trends, and when they get refinanced, banks will realize whether that is the sort of funding they want to engage in or not. So that journey will be different for each category of these players. Like for us, if you ask us what is the challenge, what are the challenges we face, I think high cost of funds is a challenge that all of us face as NBFCs. Another challenge is the inaccuracy of data. So inaccuracy and inadequacy both go hand in hand for us. When we say inadequacy, we are mostly dealing with new to credit customers. So no amount of technology, like now, in fact, I shouldn't say no amount of technology. We're using all the psychometric tests and everything to evaluate these people. But at the end of the day, it is the inadequacy of records that is forcing us to go physical in a lot of matters. Like we were discussing about how with land records now going digital, you could look into a entirely digital experience for loan against property. But sitting in Delhi, I can't even think of that. We have multiple forms of papers here. If we are doing lab, we have to specify we are doing GPAs, we are not doing GPAs. We are doing LALDORAs, we are not doing LALDORAs. I think half the country doesn't even understand the terms that we have to go through here. So these are the things one needs to understand when categorizing a particular company. And similar thing I could say for RTO. I know enough and more finance companies in the EV financing space also who would love to move to entirely digital space. But the RTO documents have to be signed physically still. So what will they do? They are signing their loan document digitally, but the moment it comes to RTO documents, they have to send those physically, and then they have to store that physically. So for somebody who does not have that mindset to store them physically, it becomes a problem. So that's where this cohesion has to happen, that these two worlds have to come together if it has to be a financial supermarket. For a particular product space, I think it's okay, you could go by entirely physical space, you could go entirely digital. But the moment you're looking at a slightly bigger market space, that is where the cohesion has to happen. Thank you.
Wow. It is obvious to have the collaboration than competition. But the smart ones actually pick and choose what really works for them. And today, RTO is one big subject. I think it itself should be a panel discussion in the coming events. Now, these days, digi frauds are very common. The cyber word is very common now. Everywhere, every time, every day, we keep getting messages that this person lost so much money. A new way of doing digi frauds, or every day there is a new method which is followed. They themselves are a fintechs, to be honest with you. So how do you see digi frauds? I'm not saying that frauds cannot be avoided, but definitely there is a measure, or there could be a small baby step we take each day to address this digi frauds as a company when we grow. So Ashok, your perspective about digi frauds?
I think very vast subject in terms of talking, but let me say again same subject, NBFC to fintech. So what all can be done, what has happened? I think recently there was a news with reference to same subject which all we are talking, that some company launched a product and everything was completely digital, and a very large set of people from some northeast state, they applied 60,000 application a day. lot many applications got processed also, but of course they had a better system, so they could still control it. But just imagine lot of application coming to you and they are, let's say, digitally in a way right, like Aditi said, that your KYC looks like good, your bank statement looks like good, everything is right. When you look digitally, everything is right. But kindly, and I'm sure some of you are maybe NBFC, do not completely go by this process that if it is digitally verifiable, it is right. So maybe we need to put in more checks and balances that even if this is right digitally, as a fintech entity, let us say, you still need to create some more checks and balances, how you can avoid them, right? I remember, let's say, when we do eKYC, maybe you have done away with FI agencies, FCU agencies, etc. But somewhere there is still need to be little more careful. Another area of, let's say, being NBFC to fintech, I see, which has, I think, has happened already to a large extent, elimination of credit bureau agencies. This is my favorite point. So no more dependence on what the credit score is. So you can create your own score by looking at the customer profile, his income profile, his social profile. You can check his digital footprint. You can check his banks and financial transactions through maybe text messages or bank statement which is directly downloaded. So you need to really look at these aspects, how you can eliminate dependence on a third party, even if it is a credit bureau, even if it is a rating agency. This is another thing which I say. No, I don't think that we need to depend on rating agencies by telling us which client is a good client, right? Because you would have seen AAA rated has gone down faster than unrated customers. So you can really look at technology which can help you to assess the customer better. And of course, microfinance industry has done it quite very well. So my sense is the more you go digital, and I'm not saying that we should not be digital, all of us are using technology, whether in-house or outsourced, but be a fintech, be a digital customer, but also be aware that the more you become tech-driven, the chances of cyber fraud are increasing. It is not decreasing. So when we see that, okay, I'm using technology platform and now I'm perfect, no. Your chances of having a fraud has actually increased, because in physical, you can still go, see, check, take references, etc. In digital, it is difficult. So the moment you think of moving away from traditional method to a completely digital method, your checks and balances have to be more, higher, not lesser. So I think we need to be very much aware of this fact.
Yep.
I think we have lesser time. So
Yeah, well said. And we also have very limited time, though I would want the my speakers to have a different perspective. But nevertheless, one quick question, and I think we'll take 1.5 minutes each so that we can finish it fast. To Aditi, if you look at the recent times, one large, you would say the leading NBFC was actually was stopped on two funding products, largely for the deficiency and the compliances, whatnot. I think Mr. Ramanji had spoken about the RBI taking very tougher measures on the lending activity when it comes to fintech and the NBFC collaborations. How do you see fintechs avoid such deficiency in the future?
So no, I'm glad you said this question, because what is happening is when you are completely driven by driving the top line, just the number of disbursement, sometimes you try to cut corners and you try to find a shortcut and not do the compliance, which actually becomes more expensive in the run. Because if you look at currently and how it pans out, even currently if you look at the portfolio quality of the fintechs vis-a-vis the NBFCs, you will find so much difference, because maybe for them still profitability, still asset quality have not become, and hence they are not investing enough in the compliance. They have good technology and I can acquire customer fast, I can disburse fast, I can show numbers. Because if you look at the valuation they are taking is crazy, crazy. And if you look at the recent IPOs, these companies had the valuation more than ONGC, which is a 100-year-old company and has thousands of crores of profit. So when bottom line is not respected, when Lakshmi, the capital is not respected, these things will happen. So yes, compliance is something, and I'm glad RBI has taken it, because even now the scale-based regulations that have come in, and you will find like we fall in the middle layer or someone in the lower layer. These are now very much, I think, right decision, because what was happening is a lot of credit culture was getting diluted. So our customers, for instance, if we are being stern with them, we are not giving them loan, and somebody else is ignoring everything and giving them loan, eventually I'm also losing out on a good customer because somebody is spoiling them. So the entire ecosystem will go bad. First the NBFCs, then the banks from whom the NBFCs borrow, and then what will be left. So I think compliance, adherence to that, you can find better tools to adhere to compliance. You can hire smart people to do that. But yes, that is a very critical question, and I'm glad you took it, because that is where fintechs have to learn it, and they have to do it by being physical.
Okay, I think I'm a sales guy, and most of my journey during my sales days, whatever awards I got, was not onboarding a bad customer, not for doing the numbers, but I always got a good rewards on not onboarding a bad customer. There are wonderful examples to quote. But however, the culture of the organization starts from there. If your sales guy is able to look at onboarding a right customer, his intention has to be absolutely right. We might talk length and give advices, but it doesn't matter. But if the culture of the organization is to onboard right customers, I'm sure all these measures or whatever we are talking about today can be curtailed at the first stage itself. So the culture is very important. So the intention is not about to just do volumes and increase your business, but culturally, if you're able to cultivate this from day one, an employee is joining the organization, I'm sure the organization also will be much stronger. So with that, what I would do is I will give 1 minute to each of my speakers to give their perspective about the journey of NBFC to fintech in your way. So how is you going to make this more interesting for your companies going forward? I'll start with Vijendra.
So I think at last, again, I'll speak the same thing. By process, we are the fintech, but by nature of collection, we are the phygital.
Kya baat hai? Mudaji?
In fact, NBFC and particularly in the context of the microfinance MFI, only leaving aside only one component, that is the meeting. That meeting which creates peerless pressure. And again, supporting my colleague's idea. So leaving aside that thing, everything can be digitized. So we have to have a essence and spirit of microfinance while selecting the clients, graduating them through CGT, GRT process, and the meeting process and sitting client together. That cannot be replaced by the technology. So leaving aside that thing, everything can be done. And when you do everything, you will be cutting a lot of the costs, and you will be smart enough to behave like banks. Thank you.
So I think when we started, it was 2 minutes per speaker, then it was 1.5, and now you do 1 minute. So my 30 seconds are gone. So I guess it's a no-brainer. We have to move to technology adoption. And like I said, anything that improves the transparency, accuracy, and speed of any of our processes is open to technological adoption. Thank you.
I think so. I still believe that they are two different part of the world. NBFC, fintech, yeah, they can coexist as phygital, and I think so. Fintech collaborating with local NBFC which have a good capability and make certain phygital company could be a big game changer. What I strongly believe in that. Thank you.
Thank you so much. And I'm sure, I think we'll definitely have questions to go. But one point which I want to drive home everyone is that one customer, everybody is striving hard to onboard. Make sure the customer is kept always happy. It is a journey. He might start with a very small funding with you, but as the organization grows, he will also grow with you. And trust me, rate, your pricing doesn't matter when the journey is good. So make sure the journey is very, very good and make that journey as a very fascinating journey. So with that, I conclude. Thank you, wonderful speakers, and a great opportunity to B2B team, Anupam and Ashish. Thank you so much.
All right, thank you so much, sir. Now requesting Dr. Sampath to please present mementos to all the esteemed panelists. First to Mr. Ashok Mittal. Everyone, let's have a huge round of applause. Next to Mr. Pankaj Gupta. Next to Ms. Anisha Kila. Sorry, Mr. Anish Kila. Everyone, let's have a huge round of applause. And next to Ms. Aditi Singh. And now requesting our team member to please come up on stage and present memento to Dr. Kumaran and Sampath. Requesting to please present a memento to Mr. P.S. Huda. Everyone, let's have a huge round of applause. Come on. Now requesting Mr. Ashish to please present memento to our moderator for the second session, Dr. Kumaran Sampath. Everyone, let's have a thunder round of applause. Everyone. That was a wonderful panel discussion that we just had. Now requesting everyone to kindly proceed towards the scrumptious lunch. Thank you so much. There's a question? All right.
Sampath sir, this is not a question, it is an expectation I am just delivering. Sir, I have listened that in many forums that onboarding process is now fintech based and digitally everybody is doing it. But I have a small expectation, any company is not coming now. It's a lot of competition in the onboarding, because if I take an example that lot of companies also here onboarding process, there is we are giving this price, that price, everything is okay sir, we are also using. But in the collection efficiency to improvement, there is no companies coming forward in the lesser price. What I'm trying to say that, sir, if I have a MFI customer base of 30,000, I wanted that all 30,000 should be notch enabled. If I go for a notch enabled, then the charges of NPCI is defined, but it's a variable on the company to company. But my question is, if any company will come in the lesser price, in the MFI also, we will onboard our all client through the notch. And why the people of rural? Because I belongs to a company where that we worked in the Odisha, we have 9 districts working, and in Haryana state also. My company's name is Anandita Finance. The people are very much afraid due to whenever the bounce will be happen, it's a one shot 395, 590 debited. If that will be waived, then my that suggestion is we will be enrolled all the MFI customers also in NPCI model, and that will be also in a fintech model. They all will be cashless. So my question is just I thrown in the system. So if any company will come up, then I'll be happy to have that company in my boarding, sir. And I think that most of the ma'am and sir, Prayatna sir, that MD sir and ma'am also will be accepted my request.
Actually, what happens is during the questionnaire is the most challenging time. We always say we'll come back to you or listen, but I'll definitely answer. But I have seniors to give their perspective, and I'll give my perspective. So anybody want to take this question? So your question was largely on the collection model and how you can bring in more cost efficiency is what you're talking about?
Lot of companies, the very competition in the onboarding process, but in the collection, there is no very lesser, very lesser, and the rate is very, very high side, sir, not competitive price.
Okay,
sir.
perfect. Aditi.
All the cashless collection modes enabled. In fact, is it? Okay. So yeah, But what we feel as an MFI is you can't completely lose out on the center meeting or the human touch, because there are so many things you get to know in a center meeting, migration, some problem, etc. Otherwise, there's a lot of problems. So what we do is we have all the modes, and all our clients are empaneled or enrolled on that, but we only use this as a backup. So there are modes, and we can discuss it over lunch because everyone's famished. And yeah.
Okay.
So we'll compare notes.
In fact, answer lies in your question itself. Selection of the client and graduating them and customizing them, this CGT process. So that is the answer. If you select right person and we give a right loan, and then give a financial discipline on your culture, this is the Professor Yunus says, result is equal to 100%.
Excuse me, yeah, I just have a small point. I mean, we all are here from NBFC and MFIs. Do we have any platform for absconding customers? I mean, because we land to the customers, we try to collect the payment also, but we don't have any platform sort of where in the absconding customers can be find out, because every NBFC has this kind of a problem. If we,
it's a wonderful question, and in fact, we as a lender, I had a wonderful opportunity to meet an ex-banker who has actually devised a particular catch or a system. If a customer has got, let's say, 1 or 2 mobile numbers, while onboarding, you would have given you 1 or 2 numbers, and over a period of time, things have evolved and he's become a defaulter and skip. And by no way, you're not able to track him or trace him in whatever addresses, permanent address, whatnot. But if he's taken a new SIM card, could be 5 or 6 SIM cards over a period of time if he is able to take, and if you're unable to track, here is a system which can give you a wonderful information about the client's movability in terms of where he is currently located, plus he can give you the new mobile number. It becomes much easier to track the customer. You don't even require a collection agent to do that. If you're able to tie up with that, you could get this opportunity. Now coming back to the question which other gentlemen raised, collection cost and IT cost or onboarding cost is always a very different subject altogether in any entities. For example, I still recall a model based on the collection. We could have an FI guy playing a role of a collection guy. For example, a collection guy playing a role of an FI guy. So the logic is the collection guy will go meet the client. He will ascertain if I give a funding to this customer, okay, I'm going to get my money back or not. And there are companies still evolve in our country. They still follow this particular model in a larger scale. But however, if your onboarding process, see, as I told you, culturally, if your intent is to onboard a right customer, obviously all this can be mitigated. But however, today with fintechs around, there are many options available. You need to only figure out which companies to onboard, and if you're able to give your particular budget or a cost, that this is a cost I'm going to incur, trust me, the companies out here will definitely help you to reach that particular goal.
If I can add, one is what he said, you please connect with 5-6 tech companies to get you as a customer for collection and all. They will give you good pricing. Okay, so fintech is that space. Second, when you ask absconding clients, have you used the credit bureau agencies like CIBIL and CRIF? So they can give you the data, latest updated data of your customer for a fees. I mean, the new address and new mobile number you will get. So you can fetch that data after, let's say, every month, every 2 months, or whenever of those clients. But
I think, sir, we should have a platform also wherein all the NBFCs who are finding such kind of a customer, they have this such data. Where we can also find out, okay, maybe X has done this, the customer had done with the NBFC, and Y has done with X NBFC.
So no, that
if we can have such kind of a platform, good for us. I mean, all the
let's
NBFCs.
Say if there is all the companies are reporting absconding client, so it is absconding. So maybe you have old address and I have new address, correct? That address you can get from credit bureau. That is what I'm saying.
Fine. Okay. Thank you.
Thank you, audience. I think we had more attentive audience compared to the previous session because many questions came in. Thank you so much. Really appreciate. Thank you once again.
All right. Thank you so much, everyone. Let's proceed for the networking lunch break, and we will reassemble here sharp at 3 p.m. Thank you so much.